Hi, David Wilkins, Wolverine Business Solutions, where we transform your accounting and operations into strategic systems and partner with you in using them to find and make more money. This week, I have a bit of news that most business owners aren't going to like. It's called the Corporate Transparency Act, or CTA, which was passed by Congress in 2021. That's not to be confused with the marketing term call to action. Apparently, the U.S. Department of Treasury thinks there's a lot of money laundering going on, and the criminals are creating shell businesses to use in laundering the money from their criminal activities. While there's no question money laundering is happening, the government is taking a sledgehammer approach, assuming that all businesses are potentially guilty until they prove otherwise. The gist of CTA is that any business which is created by filing a document with the Secretary of State's office, including corporations, LLCs, limited partnerships, will be required by law to disclose its beneficial owners to the United States Treasury's Financial Crimes Enforcement Network, FinCEN, to help law enforcement in the fight against money laundering and the use of shell companies to perpetrate fraud. So who is a beneficial owner? That's anyone who directly or indirectly through any contract or arrangement either exercises substantial control over the company or owns or controls at least 25% of the ownership interest in the company. That's a lot of people. These beneficial owners will need to provide FinCEN with a lot of personal data. The good news, if there is any, is that there are a lot of exceptions that can be applied so that you may not have to complete this information disclosure, including businesses that are grandfathered in. And those are that they have more than 20 full-time U.S.-based employees. They file federal income tax returns in the previous year showing more than $5 million in gross annual receipts and have a physical office in the U.S. That's the location where the company business is transacted, not simply an address. But that leaves out a lot of small businesses, especially virtual businesses. Businesses started before the law goes into effect have 2 years to complete the initial report and must provide an update when any business owner information changes. Businesses that start after will be required to file the report the same time they file their paperwork with the Secretary of State to form the business. The penalties for filing are quite steep. So when does this start? Well, the CTA becomes effective on the same date that FinCEN's final regulations are published. That was supposed to be no later than January 1st of 2022, but it didn't happen. When these final regs will be published is anybody's guess at this point. This is good information to know, however, as you prepare to start a business and work on its structure, and to see if you will be able to qualify for an exclusion as a grandfathered private business. To learn more about how Wolverine Business Solutions is partnering with our clients to keep up with new laws and to help them to find and make more money, please reach out to us using the link below. If you have any ideas for other content or questions on how to improve financial performance, accelerate growth, and build lasting value, please let us know in a message below as well. And be sure to join our Facebook group and our YouTube channel using the links below. Thanks.